Welcome to NASDAQ Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ. Joining me is Chris Engelbert, founder and Chief Investment Officer of Engelbert Financial Advisors. We're going to talk about the 3 common mistakes people make when they are looking at inheritance. Chris, it's great to meet with you. Welcome back to Trade Talks.
Thanks, Jill. Great to be here. And we are very excited. Last year, Jamie and I wrote a book, Death and Dollars, A Guide to Estates and Inheritance. We're very passionate about this subject because, unfortunately, when you're an RIA, people end up coming to you and they've got to settle an estate of their parents or loved ones, etc. And so we wrote this book, and in fact, we're giving it away. We feel so passionate about this subject, and it's not a legal book. That's one of the things I'm going to talk about in a minute, but it's really a practical guide to what people need to do when they're involved in settling an estate. And the 3 biggest mistakes that we see people make are: number 1, somebody dies with an outdated will or no will whatsoever. We see this all the time. In fact, people will jokingly say, "Oh yeah, I wrote a will. We had a will written 20 years ago when we were getting on a plane because we had little kids and we haven't updated it." Or, some people even will come out and tell you, "Oh, I don't even have a will." And we're like, "Are you kidding? Really?" So that's the first biggest mistake we see. The second biggest mistake we see is people trying to do it on their own. You need to hire a competent attorney, somebody that does estates and has probated wills. They will help you and really guide you through the process. I've had a couple people say to me, "Oh, hey, we're going to get the short certificate and do it ourselves." We're like, don't do it yourself. The third mistake that we see is people underestimate how long it's going to take to settle an estate. Even if it's a super simple account where everything's in one investment account, it can still take 6 to 9 months. And if there's properties or multiple properties, it could take up to 2 years to settle estate. So we strongly urge people to reach out to us. If they go to our website, engelbertfa.com, they can contact us. We will send them a free copy of this book so they can really navigate what's going on out there.
So Chris, you mentioned you and Jamie are passionate about planning and helping folks do this. Why do you think it's a good idea in general for an RIA to write a book?
Well, what really helps from an RIA standpoint is it demonstrates your knowledge of the subject. I mean, most RIAs out there, have a tremendous amount of experience in certain individual areas, etc. This happens to be one area we've had a lot of experience in, and it really helps the RIA to demonstrate his knowledge to both his clients and his prospects as well. And I think the other reason why you want to write a book as an RIA is that it separates yourself from the competition. Not many people do it. Not many RIAs do it. I really think they should, because again, they've got a lot of knowledge that they can share with people out there. And I really think it's also, obviously it's about business, but it's also about giving back too.
And Chris, let's go through our charts as we always do. And it's been quite the month since we spoke last. Let's start with the S&P 500.
Yeah, S&P 500 keeps powering higher. It's had a pullback. Earnings seasons are over. And in fact, FactSet published that this was the largest amount of upside earning surprises they've ever seen. We think people are still too bearish, and we think companies are doing a lot better. Obviously, last year after the pandemic, everybody was like, "Oh, things are not going to be, as good." They're not only as good, they're better than what many people think. And the S&P 500, like I said, last week's pulled back briefly, but I would not be surprised to see new highs in the near future.
And if we look at the NASDAQ 100, a little bit more chop there.
Yeah, a little bit more chop, a little bit scary. There's been, you and I have talked about this before, there's been a vicious rotation. In fact, a large investment banking firm published this week about how many hedge funds were short the tech sector. I think that could end up being a mistake. We've seen a lot of rotation to value stocks. They are on fire. Obviously, they're the energy and the finance area. But I remember you and I talking about this, and large cap growth was leading, and then value would come back. And now almost the tables are turned where large cap value is leading, but I would not count out large cap growth because again, some of those earnings that we've seen have been phenomenal. I think these gains have to be digested. I think last week was probably an important short-term low.
And speaking of value, let's take a look at the Russell 2000.
Yeah, Russell 2000, small mid-cap stocks, blasted off in January and February. They made new highs. They're kind of trading sideways right now. And like you said, there's a lot of chop in some of these markets. But, there's two ways to digest, gains as far as an index goes. You can either trade sideways, which is what I think we're going through, or have some kind of pullback like the S&P and the NASDAQ. I think the Russell 2000 is going to trade sideways for probably another 30, 60, 90 days. But ultimately, these small companies are the biggest beneficiaries of the reopening trade because obviously that money goes right to their bottom line and they can realize the profits from the economy really getting back on its feet.
And Chris, if we take a look at the 10-year, this really has been one of the reasons that we're seeing the volatility in the NASDAQ 100 as rates, continue to, if they haven't made that substantial of a move as we looked at in prior months, but still a little bit elevated.
Yeah, rates are kind of stuck in a range. I mean, once they blasted off at the beginning of the year through 1%, 1.25%, 1.5%, and kind of peaked around the 1.75 level, they've been in a trading range here. We made a call a couple of months ago. We actually think, we've seen the highs on rates for the year. We moved some of our clients' money to what they call longer duration bonds. Again, I can make the case that the bond market doesn't do a whole heck of a lot for the next couple of months because obviously everybody's trying to see, and we had a Fed meeting and the Fed was talking about some of the changes and people really parse the Fed, minutes, but that they're thinking of tapering at some point in the future. We think rates are on hold for at least well into 2022.
And to wrap up here, oil, of course.
Yeah, you and I have been talking about this for the last couple of months, and the chart that we're showing on oil is a monthly chart going back, and you can see that we finally broke above a substantial downtrend line, and we're hanging out in this low $60 area. Again, could the market trade sideways after such a huge rally we've had? And we've seen a huge rally in the entire commodity complex so far this year. But we think higher oil prices are here to stay because the other half of the oil trade is the reopening of the economy. And we think the economy the next couple of months is going to come roaring back.
All right, Chris, appreciate the insight as always. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.